It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
And welcome back to Trading Stocks Made Easy. I'm your lovable, adorable, friendly host, Tyrone Jackson from thewealthyinvestor.net. How are you? I love how many of you love this show and love the idea that you're learning something every time you listen. So here's what I'm going to talk to you about today. For those of you who are interested in making a lot of money in the stock market, I'm going to talk to you like I normally do in layman's terms about tech stocks. Now, obviously, I can't go through every tech stock in the stock market. If you have a membership at WI Trade School, you can ask me questions. I will answer there. And that's where I really help you choose stocks that are good long-term investments as well as short-term trades. By the way, I do want to say this about the wealthy investor approach to the stock market. The approach that I created is a combination of trades where you bring in residual income because most people need more residual income in their life than anything else. And if you don't want to utilize that income in the stock market, then you invest it in stocks and sectors that you like. So, for example, let's say I love the payment processing sector. You might not love that. You may love the auto sector with all these EV cars coming out, right? But you put your money in the sector of the stock market that you identify with most. And why is that? It's because it makes research on those companies super duper easy. Even if you know nothing about the stock market, I think you could really get rich in the next 2 to 5 years because there's so much integration and innovation. What do I mean by that? For example, in the auto sector, right? There's so much technology going into an automobile these days. They're basically moving tech machines, right? So not only can we watch movies in our cars are running with more efficiency. They're running the entire system. There are semiconductor chips in every automobile now, which, by the way, I don't like because I liked it better when they were just components that could be changed. But your car is basically a moving computer now. So if that turns you on, great. If you like the airline sector, right, good for you. I wouldn't recommend it, though, because what really generates a profit in the airline sector is really fuel. Right. So they've got the labor costs down with the pilot and the crew and the running of the airline. But that variable that is ever present is how much are fuel costs. And who wants to invest in a sector where fuel determines whether an airline is profitable or not? I'm simplifying, of course, but that's essentially how it works. OK. Technology right now is where it's at. I think those are the stocks that are really going to rise the most in the next 2 to 5 years. Not all technology stocks, by the way, but a select handful that are innovating using the technology of the day. I thought I'd talk about a few companies here. As I do this, I want you to know these are not necessarily stocks that I endorse, but I'm using them here on this show for teaching purposes. If you really want to find out the stock that I like in the technology sector, be sure to head over to thewealthyinvestor.net, sign up for the free newsletter, or go straight to witradeschool.com, and you can kind of review everything there. It's kind of like a mini Netflix, really, for people who love to trade and invest. I update the site weekly, and most importantly, I answer your questions specifically. All right, let's talk about what it takes to be innovative in the technology sector, and it's very simple. You have to be creating things that raise revenue. Now, in the stock market, when you're investing in the stock market, it's all about revenue. So stocks that go higher discover new revenue streams these days that they can earn billions on. I'm going to start off with something that's very obvious, like a Microsoft, okay? Microsoft, I can remember when they first went public, way back when, it was about their operating system. Bill Gates had a vision, which he stated publicly, which is the Microsoft operating system on every desk and computer around the world. Well, he basically achieved that goal. But once he got there, once the operating system was on a computer made by a manufacturer, then what? Then they had to develop other software packages and other functionalities and integrate that into the Microsoft operating system if they wanted to make billions and billions. So there's that wonderful saying that I really love about tech stocks: here today, gone today. Right? Because the second you think you have the brand new technology, someone else comes along and they say, not so fast, my friend. We are also competitors in that space, and we learn how to market better and faster. Okay, so Microsoft these days, still in the software and operating business, but now they have a whole suite of products. Right? So most of us use Microsoft Word to compose documents, email, send, attach, etc. That is now part of a suite of services which they now bill us monthly for. Why do they bill us on a monthly basis? Because they discovered rather than licensing the software once every 2 or 3 years, they would rather do what? Bill our credit cards on a monthly basis. If you don't pay the bill, you are locked out of the use of software. And I got to tell you, I'm not really happy about that. But the world changes. They're also, if you can remember with Xbox, they're in the gaming sector. Now, this gaming sector is huge worldwide because gamers spend a lot of money competing against each other in their community and for the upgrade to every game they play. So we hear a lot of talk about esports and how big it's going to be, and it does very well, but Microsoft really maintains dominance in that space. Their major growth is coming from cloud services, storing virtual information for almost every major company in the world. They call that enterprise, right? Cloud. And these enterprise cloud contracts can go anywhere from 5 years to 15 years. And Microsoft is not shy about saying, if you want us to run your business in the cloud, it's going to cost you $50 million a year. Now, you hear me always talk about top-line revenue growth. Everything that Microsoft does, whether it's licensing, gaming, has built-in price increases in it. And if you really want to become rich from the stock market, you have to understand it's about price increases and revenue growth. When you're growing revenue, right, that's what's known as organic growth. Non-organic growth comes when you make an acquisition. And who did Microsoft recently buy? Activision. That means that the Activision revenue at some point will be incorporated into the Microsoft revenue, and there will be price increases. You see, anytime we're investing in a company, we're looking for that company to make more and more revenue, either through developing something or through acquisition. This is why I see Microsoft shares really doing exceptionally well over the next 5 years, because there's so much running room in terms of acquisition and price increases. Now, if you really want to be fancy and involved, there's the payout of the dividend, the yield on the dividend, and there's also something called free cash flow and the balance sheet. Well, real professional traders analyze all of that, and I got to tell you, I do too, but I really focus on that top-line revenue growth. Okay? It's just a system. You learn how to look at every company from the same perspective. And when you do it really well, you can predict with, I'd say, about 80 to 90% accuracy which stock is going to go higher. So a lot of times people say to me, "Oh, Tyrone, you're such a really good stock picker." And I say thank you with some humility, but really I'm just using the same system over and over and over and over again. Microsoft, a tech stock, certainly a tech leader. You know it's a member of the Dow Jones Industrial Average. That dividend is really ripe and juicy. Therefore, they're going to attract what? More pension and 401k money. Now, let me break this down for you, since today is about really understanding the mechanics of tech stocks. You see, when a company pays a dividend, not only do you and I want that dividend to show up at home every 13 weeks like clockwork, so do pension funds. Pension funds buy millions and millions of shares per day in some of these tech companies, not only for the growth of the stock, but also to receive that dividend. So the little game that we have going on in the stock market to help push stock prices higher right now are share buybacks, which means you're reducing the float. So in other words, if there are 5 billion shares in the float and I buy back 1 billion of those shares and I raise the dividend, do you know what's going to happen? The stock price is going to go higher. And we see this all the time in the last 2 to 5 years. That's why we've seen some of these stocks double in value, because of this little game, which is totally legal, that the board of directors can play and the CFOs at these companies to make sure that their stocks are, as I like to say, good dates and the prettiest girl in the room. Now, don't worry if you don't understand everything that I'm talking about. This is just part of getting a financial education. For those of you who already have an online brokerage account and you've been participating in the Wealthy Investor program for quite some time, you're saying to yourself, he's right. Because when I make stock recommendations, there's always some special dividends and some buybacks that have helped cause the stock price to actually go higher. So Microsoft is one of those. They'll probably be using that formula for a while. What I like about them, they're not afraid to make an acquisition at all. I want to talk about another company right now. Hard to believe it's considered a tech stock, but if you can access this company on your phone or your tablet, Netflix is a tech stock. Now, I really am enchanted by Netflix. The share price is ridiculously expensive, but it is going higher. I don't care. Now, I'm going to make a prediction right here on my own show, right? I don't care what you are paying for Netflix right now. Within 3 years, you're going to be paying $50 a month. Yep, that's right. $50 a month. And I'm going to tell you exactly why. Netflix recently announced that they're going to produce $1.7 billion of new programming. No other streaming service on the planet has claimed to be producing as many shows with that capital as Netflix is. So what does that mean? We're all going to be tuning into Netflix, because that's where the new stuff is going to be. You see, when streaming really hit the open air, it was about being able to watch 36,000 movies for $5.95 or $6.95. But here's what we've discovered. The consumer doesn't want to see Top Gun over and over and over again, or Beverly Hills Cop 1, 2, 3, 4, 5, 6, and 14. Once we've seen it for 3 or 4 times, we tend not to go back and watch the movie. We crave fresh, new entertainment. And guess who the leader is in fresh, new entertainment? That's Netflix. They are in part spending so much on content so they can, eliminate their competitors. You see, Disney Plus is not investing the same kind of money in new content like Netflix is. And that's how Netflix, believe it or not, is innovating. Now, I'm going to make a second prediction here, and let's see if Netflix follows me. We know they just added sports. More of a reason to keep your subscription. A lot of these smaller services out here, Netflix could easily buy them, and Netflix can put some of its old content, like season 1 of Stranger Things, they can make that part of a company that they acquire. And maybe that company's only charging you $9.95 a month, but Netflix will make you watch ads. You see, the key to success in the streaming game is that ultimately we're all going to be watching mini commercials before or after a show. Why? Well, the ability to take in ad dollars makes Netflix ubiquitous as a streaming service. Because if you're getting streaming subscription dollars and billions of dollars from advertisers, guess what? You've won. So most streaming is going to be ad incorporated in the next 2 to 5 years. Let's see how many companies Netflix actually acquires. That would mean they would be getting double in the subscription fees, right? Subscription fees from their service and any other service that they combined. And that would allow them to dominate and own 60, 70, 80% of the streaming businesses. Now, let's see if they expand that way in their vertical, but they're going to have to buy something. Why? To impress you and me as Wall Street shareholders. Hey, if you want to make $1 million in the stock market, you are listening to the right show. I'm Tyrone Jackson, the wealthy investor, and I'm demystifying Wall Street and how it works so you can profit big. Back in a moment.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
Today, we're talking about choosing technology stocks and why they go higher. And really, the reason that the shares actually goes higher these days is largely due to innovation, which is causing top-line revenue growth. Now, one of the companies I just wanted to give an honorable mention to is a company called Cisco Systems. And they basically created all the pipelines that allow servers to communicate with one another faster. So, for example, when you pull something up on a website, that website is actually based on a server somewhere in the world. It's the IP address that finds that information, that pulls up that website, that allows you to watch that video or read those blogs, right? The rate at which that happens has not only to do with broadband, but what also the size of the pipes, as they used to say. How quickly can that information get to you? Today, we get information at blazing speeds, and that is in part due to Cisco Systems. But Cisco was late to the cloud. Microsoft was there early. Cisco now has its own cloud, but Microsoft has all these long-term contracts, and it's hard to convince the marketplace that if you're Cisco, your cloud is just as good as Microsoft's, right? Because not only does Microsoft have these vast data systems, they're all around the world. So if you're trying to catch up in that game and you're Cisco, well, you're kind of a day late and $1 short. However, based on name recognition, I think Cisco will still get its share, but Wall Street is not pushing up the stocks the same way. Remember, technology here today, gone today. And if you think I'm joking, remember Yahoo? Yeah, Yahoo was a publicly traded company at one point, and it was making most of its money off of ads until a competitor was born. And that competitor's name was Google. Its parent company is now called Alphabet. Google took search and advertising to a whole new level. And Google also got in on the cloud, as well as a host of other services. So what does that mean to the top line? Well, it means Google's top-line revenue is going to continue to rise. Yes, it's a member of the S&P 500. Yes, they perform share buybacks. Yes, their revenue organically grows, and they make acquisitions. That's why the stock is where it is. I suspect their drive and desire to stay on the cutting edge of innovation will continue to make the company a winner. See, these are the giant companies when it comes to technology. Now, here's my final prediction of this week's episode. You ready? There is some company that is in somebody's backyard or garage right now that will dominate in 5 years or less. We don't know what it is. That person or group of people are creating it right now. It will go public, financed by Wall Street, and you and I, as shareholders, will cash in on that company because what they do is so unique, or it's a variation on a very popular theme that their revenue is going to rise exponentially. So this is part of what's exciting about being an investor is that there are going to be even more opportunities over the next 2 to 5 years for us to buy companies that go public at, let's say, $70 And 2 or 3 years later, they'll be $400 or $500 a share because there'll be a demand for their technologies, and it's all financed by Wall Street. If you look around your home, your apartment, and your car, everything you touch is financed in whole or in part by Wall Street and shareholders. You might not recognize that right now, but the fact that you don't recognize it is one of the reasons the rich get richer, because they've learned to seek out new technologies in publicly traded companies. And there's going to be quite a bit of them in the next couple of years. I want you to have the confidence, the financial education to get in on this game so that you not only change your life, but you change your life for your kids, nieces, nephews, and future generations. That's what's going on Wall Street right now. Can you be a millionaire? Sure. From technology stocks? Absolutely. But I'm here to tell you, realistically, if you learn how to choose these companies, you could be a multimillionaire because as a shareholder, the CEO, the CFO, and the board of directors work for you. Well, apparently, you have a lot to be excited about. There's a lot more to learn. Please join me at thewealthyinvestor.net. Sign up for the free newsletter, or if you want to go straight to trading, join me right now at witradeschool.com. That'll do it for me this week. I'll see you right back here on Trading Stocks Made Easy.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.